Hey everyone, welcome to the channel, or welcome back to the channel. This is Living in Columbus, Ohio, and today we're going to talk about the real estate market and if we're headed for a crash. What's up everyone, my name is Brad Winter, and if this is your first time to the channel, make sure you tap on that subscribe button below and you click on that bell so you get notified every single time I do a new video. And in these videos, I talk about everything that you need to know about living in the Columbus metro and surrounding areas. Now, I am a licensed real estate agent in the state of Ohio, and as much as I love doing these videos for you guys, I would love nothing more to help you with your real estate needs. So if you're moving or relocating to the Columbus metro or surrounding areas, make sure you pick up the phone, give me a call, shoot me a text message. Whatever you need to do, make sure you do it, because I'm gonna have your back when relocating to our incredible city. On today's episode, we're gonna talk about the real estate market here in the Columbus region and if we're headed for some sort of market crash. Now, lately, there has been a lot of bad news in the news, and it's got people freaked out. We live in a society where headlines dominate everybody's thinking and, kind of what they're gonna do almost. And it's pretty crazy to me. But let's kind of talk about what's going on in the real estate market, specifically here in Columbus. Now, the real estate market is changing. We have interest rates that are right around 6% as of today, which is June 20th. That is significantly higher than it was 6 months ago. So yes, the real estate market is changing. We're starting to see homes that 6 months ago, they'd be listed on a Thursday, they'd be in contract by Sunday. Now, homes that are not priced appropriately for today's market, not 6 months ago, we're starting to see those houses sit on the market a little bit longer. They're gonna have to do some price drops. Now is actually a really good time for buyers to pick up a home that doesn't have a lot of offers on it, or maybe is not going to, have a enormous amount of, appraisal gap money attached to it, or it's gonna go well over list. So, that's something that's a lot different today than it was just 6 months ago. So that is a change that we're seeing in the market. Now, I will tell you this, because it's happening to me all the time right now. If the home is still priced appropriately and it's in a good neighborhood and it is a nice home that doesn't have a bunch of DIY stuff, or a fix and flipper didn't do a bad job, those homes, they still have multiple offers on it and they are still going well above asking price. Now, is the chaos there that it was 6 or 8 months ago? No. But for example, I went up with one of my buyers, we submitted an offer on a house that had 15 offers to it still. And that is in today's market with interest rates hovering around 5 and 6%. So guys, I'm telling you right now, we are not headed for a real estate market crash. We are definitely headed towards a new market where you are gonna see home prices not appreciate as much as last year at 16, 17%. And you are probably not gonna see the chaos of amount of buyers that are going to be bidding on a home. But one thing is for certain, this is around the country and most places, and specifically here in Columbus, we still do not have enough inventory for the amount of buyers that are out there. There are still people in this market that understand historically mortgage rates are around 4.5% to 5.5%. And yes, they are 6% today, and that is a little bit higher than historical numbers, but that'll ease a little bit. And people that understand that are still gonna get into a house. They're gonna look to refi out of that rate a couple years from now, or maybe they're doing an ARM, or maybe they're paying cash. There are still buyers and sellers in this market. It's just understanding what is going on and making a great decision is something that you need to make sure that you're prepared for. What I want to talk about now is interest rates, and that's a question that everybody's asking myself about, my team about. it's in the news, it's everywhere, right? Interest rates, interest rates, interest rates. And I know we just kind of talked about it before, but what I want to do is throw up a graphic of the 30-year average. And if you really take a hard look and dissect this, where the rates are falling right now, pretty much in line with the 30-year average. Now, 6.1, 6.2 is definitely going to be a little bit higher, but there's a pretty safe bet that in the coming months, those are going to come down a little bit. And we're going to be right back in a 30-year average. And, a lot of times people have a hard time accepting this because their friends, their family, their colleagues, they bought a year ago and maybe they got locked in at 3%. Or, myself, I bought 8 months ago and got locked in at 3.1%. And that rate is incredible. So people get a little jaded, or, they feel like they missed the boat a little bit when it comes to interest rates. Now, I just briefly mentioned this, is I have this saying is, marry your home and date your interest rate. And what I mean by that is the rate is the rate. If you want to buy a house today, if you need to buy a house today, you should do it. However, the interest rates are going to fluctuate. Whatever the rate is today, that might change next week. And it might drastically change a year from now, or 2 years from now, or 5 years from now. Whatever that looks like, you'll be able to one day refi out of that and get some better numbers as far as your mortgage payment and your interest rate when you refi. So kind of think about that when you're thinking about buying a house. Is yes, this is a short-term, a little bit of a bummer for people, but long-term real estate appreciation is just going to keep going up and up. So that means, the home that you buy today, in my opinion, is going to look like a deal 2-3 years from now. So, the rate is a big deal, and I fully understand that limits some people on their affordability or what they need, but there are strategies that you can use with your lender to hopefully, reduce the rate percentage as much as you can. One thing that we're doing is with our clients, we're educating them on why the interest rate is where it's at today. And, if you look back during the COVID era, we were in like a little mini recession. So the government had to pump money into the economy. They lowered the interest rate. It sent the housing market in an absolute frenzy. We had so many people that could afford X, Y, and Z on a house, so many buyers, not enough sellers. And so it just blew up. And then today we have inflation that's out of control. We have other things in the economy with oil prices that is nuts. So now they have to raise those interest rates back up to, more of a historical average, kind of cooled, the spending, if you will, in the real estate market. So, we're talking to our clients about these, and then we're sending them to the lender and let them talk about maybe it's best that you do some sort of 7 or 10 or 15 year ARM, or, maybe putting more down is going to help you with your payment. There's all these different scenarios. So when people talk about the interest rate, they are what they are. You can't change them, not today. So let's have a great game plan with the team, and then we'll make the best decision we possibly can as a unit and help you guys find exactly what you're looking for. Another thing that we're doing with our clients right now, and I think this is more important than ever, is when we have these buyer consults, we're educating the clients, like we just talked about, on what's going on in the area. And you got to really evaluate, like, what do you feel comfortable with a payment range? Saying, hey, I can only afford $1,100. Okay, well, that limits kind of what we're going to look for. But if you're like, I have a range from $1,100 to $1,500 that I'm comfortable with, then that's going to give us, some pretty good options on what we're going to find for you. And so having those buyer consults is really important. Another question I like to ask is, where do you see yourself in 7, 10, 30 years from now? And every single person has a different answer. So, if you're going to only be in this house for 7 years, then maybe you got to look at doing some sort of an adjustable rate mortgage, because it'll help maybe lower your payment down, your rate, knowing that you're not going to be there for a long time. But if you are thinking, hey, my kids are going to grow up here for the foreseeable future, we don't feel like we're going to move, maybe getting locked into a 30-year and then waiting to refi out of that when the rates drop, maybe that's the best way to look at things. So again, and I've harped on this all the time in these videos, I'm harping on it today, just sitting down with us, having that buyer's consult, and really making an educated decision is going to be your best bet right now. Another thing that's really important to think about right now with the real estate market, especially in Columbus, Central Ohio, is like, what is Columbus's outlook right now? Like, what is our market? And if you really kind of do your homework and understand what's happening in our region, if you are a buyer, getting in today is gonna be monumental as far as maybe what you can afford, or what even like you like in a house and that's available, because with the influx of people that are moving to Columbus every single day, home prices, they might cool off, and maybe they don't have the rate of appreciation they've had over the last 2 years, but they're gonna keep getting more expensive because we still have a supply and demand issue. There's not enough houses from sellers selling. Builders aren't really keeping up or building enough, and that's a whole nother story with that. And there's still plenty of buyers. So supply and demand, when there's more demand than supply, that's gonna raise those prices. So again, Columbus, we're growing so fast. I mean, we have Intel it ain't even broke ground yet. And when that puppy kind of takes off, look out, because the influx of people that are gonna be moving here for Intel, and then if you think about all of the sister companies that support Intel and all the companies that want to be a part of kind of this boom that we have right now in Columbus, it's going to get pretty competitive out there again. And it's hard for me to tell you like, hey, it's going to be this or this. All I know is it feels like every single day I'm looking at Columbus Underground or this website or that website, I'm seeing all these companies move here, and people are going to be moving here from other states for these jobs. The affordability here is great. Columbus has a lot of things to offer. It's kind of like centrally located in the Midwest, so you can get anywhere. It has a lot of things that are attractive to people, especially in today's environment. So there's just a lot of growth that's happening here. I mean, look at Hilliard and Dublin. Those places are exploding, and they're going farther out and out as well. They're buying land and building houses. And then you've got what's happening on the east side with Intel and the downtown market. Look at Old Town East, Marion Village, Franklinton. Those places they're like hard to get into right now. Once, 5 years ago, maybe they were afterthoughts, or 10 years ago, or maybe they just quite weren't ready for things. I mean, just look at it right now. It's an investor heaven in these places. They're buying homes, they're fixing it up, they're selling them for top dollar. So there's just a lot of positive things that are going on in Columbus that I really think is going to keep propelling the real estate market. And I don't really believe we're gonna see some sort of crash like we did in 08, 09. And that's a whole nother story of why that crash happened. So guys, my thoughts on this whole real estate market right now is there are some adjustments that are gonna have to be made, and there are going to be buyers that are going to be sitting on the sidelines for a while, and you are not gonna have a lot of sellers that may be locked into really low rates gonna sell their house unless they have to, unless they're moving, unless they are downsizing, or maybe they've got to upgrade because they're having maybe more children, or they're moving to a different school district. So I really don't think we're gonna see some crazy market crash. I think we're gonna see a more normalized market where houses that are priced appropriately are still gonna have multiple offers just like they did before COVID, and they're gonna go for significantly more above asking price. And those homes that are overpriced, they're gonna sit a while. So there's just this new game in town, if you wanna say, of what's gonna happen in the real estate market. And the most important thing that you can really do is just surround yourself with a good team. And that's what we do here, at the Winter Group. We have great lender partners, and we just really educate our clients to make sure that you're making the best decision for yourself, your family, and your future. All right, guys, so that's a little bit of a market update. Is the market crashing? No. Video. Hope you guys enjoyed it. If you have any questions or have any comments, make sure you shoot them below. We'd love to hear what you guys think about this. If you are thinking about moving or relocating here, make sure you pick up the phone, give me a call, shoot me a text message, whatever you got to do, make sure you do it, because I'm going to have your back when relocating to our incredible city. And until next time, guys,